Hey everyone, and welcome back to the Tesla Stock Podcast. Tesla is set to report its third quarter delivery numbers this week. But in a strange twist, the number itself might not even matter. The stock has been on an absolute tear, driven by a narrative that has shifted far beyond the factory floor and into the world of artificial intelligence. But a stunning success story out of China shows the car business might still have some life in it yet. With the stock now trading around the $44 mark, we need to break down the numbers, the narrative, and the new hit product. Let's start with the big event of the week, the third quarter delivery report, which is expected to drop early on Thursday. Wall Street is currently playing a guessing game with the final number. The official analyst consensus compiled by FactSet is for about 447,000 vehicles. That would be down about 3% from the same period last year. However, many of those estimates are a bit dated. More recent forecasts, including from well-known Tesla researcher Troy Teslike, are pointing to a number closer to the 470,000 to 495,000 range, which would represent a small year-over-year increase. The big wildcard this quarter has been the expiration of the $7,500 federal EV tax credit here in the U.S., which officially ends on September 30th. This has undoubtedly pulled a significant amount of demand forward into Q3, but it's almost impossible to know exactly how much. But here's the key question. Will the final number even matter? Coming into this week, Tesla stock was up a staggering 31% for the month of September alone. This incredible rally has not been driven by expectations of a blowout delivery number. Instead, investors have been laser-focused on the company's artificial intelligence opportunities, fanned by a flurry of analyst price target hikes. This has created a strange situation where the actual health of the core business seems to have become secondary to the long-term AI story. But while Wall Street is debating the global number, the results for one new product in one key market are not up for debate. Our second story is the incredible and arguably underreported success of the new Tesla Model YL in China. This is the new, longer, six-seat version of the Model Y that launched in August, and it has been an absolute blockbuster. The vehicle's entire September and October production allocation sold out almost immediately. On its launch day alone, Tesla reportedly received more than 35,000 orders, and any new orders placed today are not expected to be delivered until November. This is exactly what the company needed, and it couldn't have come at a more critical time. As we've discussed, Tesla has been struggling in the hyper-competitive Chinese market. This launch proves that the Tesla brand still has immense pulling power, and that product innovation, even if it's a clever adaptation of an existing model to better fit local family needs, is the key to fighting back. By expanding the cabin space and bringing the price down, Tesla has hit a sweet spot in the market. It's a massive win that provides a powerful, positive data point for the bulls and demonstrates that the car business isn't dead yet. But even that success story is likely to be overshadowed by the main event of the week for the AI bulls. Our final story is the highly anticipated release of full self-driving version 14. Elon Musk announced on X last week that the new version will have an early wide release this week. He then laid out a rapid-fire timeline for follow-up updates, 14.1 and 14.2, and made the now famous claim that, quote, the car will feel almost like it is a sentient being by 14.2. This release is the engine that has been driving the stock's incredible rally. It's the tangible proof point for the narrative that Tesla is not just a car company, but an AI and robotics leader. This is what investors who are buying the stock at these levels are betting on. The delivery numbers for the next few quarters are expected to be messy and uncertain, especially with the U.S. tax credit going away, which will likely cause a demand cliff in the fourth quarter. So the company is aggressively pushing the narrative forward to what it sees as its real, long-term value driver, software and autonomy. The release and, more importantly, the real-world performance of version 14 will be a major test of that narrative's credibility. So, to sum it all up, we have the Q3 delivery report coming this week, but the number itself may be overshadowed by the powerful AI narrative that has fueled the stock's massive 31% rally in September. We have a huge, undeniable product success in China, with the new Model YL selling out for months and proving Tesla can still win. And the main event of the week will be the highly anticipated and hyped release of FSD version 14, which Elon Musk is promising will feel sentient. This brings me to my question for you. On Thursday morning, when the numbers are released, what will you be paying more attention to? Will it be the official Q3 delivery number, which reflects the health of the car business today? Or will it be the first impressions and videos of FSD version 14, which represents the promise of the AI business of tomorrow? Let me know which data point you think is more important right now in the comments below. As always, if you found this breakdown valuable, please hit that like button, subscribe to the Tesla Stock Podcast, and be sure to turn on notifications so you never miss an update. Thanks for listening, and we'll see you next time.